Good evening to all the people out there. Welcome to my free life webinar. This is Almas here, and I welcome you all to this webinar where we will be talking about forex market. Okay, I know it's been a hectic week, and soon we are going to enter weekend mode. But yes, what if there is something to learn before we start our weekend? So let's not waste time. People who have connected here, I would like to welcome you once again at SmartFX webinar. All right. And let's go ahead and see our next slide, that what are the topics that I'm going to cover today. So what are we going to talk? What I'm going to talk today is about Forex. All right. What is traded in Forex and how to trade in Forex. Three topics, and we are going to discuss it. And I'm going to talk about it in a very simple language, in a very layman's language where it becomes easy for each one of you to understand. All right. So let's get to our first topic, which is what is Forex. Okay. Now, if you have attended my previous sessions or my very first webinar, I had spoken about Forex market basically. So what is Forex market is? A market consists of currencies. It's a financial hub where fiat currencies are traded. Okay. Now, currencies are the name of the game. What you can do is like you can buy and you can sell. Now, think in a way, there is Christmas holiday going to come and you're planning to travel. Now, but obvious, if you want to travel from Dubai to US, what is your first thing that comes in your mind? You're going to convert your dirhams into dollars and then going to travel, right? Because it is easy to use dollar or the currency wherever you are traveling of that particular country. Similarly, in the forex market, it refers to the same thing. What do? We buy and sell currencies against each other. Okay. Now, this can be for a long term, this can be for a short term, or it can be for a few seconds, few minutes, depending on what are you looking at. All right. On that basis, you would trade currency. Now, the first thing that you need to know about forex trading is that the currencies are traded in pair. Okay. So as I said, if you want to travel from Dubai to US, you're going to convert AED into USD. MT5 that we are giving you, what do? We trade currencies. Now, how do we trade currency? We trade currency in pairs. What are some of the famous currencies that are traded in? Like I've mentioned here, if you see, I've mentioned sterling, that is the Great Britain pound, yen, euro, dollar. These are all currencies that can be traded in. Now, how do traders trade into currency? There are two types of markets that you can trade currency in. Spot market. When I say spot market, it means that whatever the current price of the currency is going on, you're going to exchange that currency against the other currency at the market price. What is the future market price? Future market price refers to the next month price. Moving on to the next slide. Now, how are you going to analyze the forex market? How? How? Because there are a lot of factors which are dependent when you want to trade in forex market. I have made it very simple for you all to understand that there are three important segments where you have to divide, where you have to understand each segment and then trade. So I've made it easy because this is just like a medicine. So you have a red pill, you have a green pill, and you have a blue pill. Okay. What does the red pill stand for? Now, the red pill stands for technical analysis. So Technical analysis means you're but always going to look at the charts and you're going to see where and how the trade is working out for you. The green pill. The green pill is for fundamental analysis. When I say fundamental analysis, it means what is going around in the global worldwide, in the what is the economy happening, what are the interest rate, is there any kind of war happening, is there inflation, recession, all these things relate to fundamental news. What is a blue pill? Now blue pill is sometimes referred to as a sentiment. Sentiment means what are people speculating at, is it going to go up or is it going to go down? Now all these three analysis I am going to talk in detail about it. Okay, so first is the technical analysis. Now the technical analysis is a framework in which traders study price movement. When I say traders study price movement, it means that if you have bought dollar, what is the price of the dollar? Let's consider it as 110. So you are thinking that the dollar is going to go up. So you're going to look at the price of the dollar. You will look at the chart and you will say from 110, it will go to 111, 112, 113. Or probably it might come down to 109, 108 or 107. Now, depending what sentiments are you? Are you looking out to long the position or are you looking out to short the position? When I say long and short, it means that you're thinking from the current point, it is going to go up or it is going to go down. Similarly, for fundamental analysis, I told you it refers to analyzing on the social thing, economic factor, political factor, what is the demand, supply, a lot of factors which is considered when you are looking out for fundamental analysis. Sometimes it is not always about the numbers, but how the market players feel. How do you figure out and trade forex of that? Now, how do you know when to buy or sell a currencies? So let's take an example. Okay. And in this example, what am I considering is like, I'm going to take an example of a fundamental analysis. So on the fundamental analysis, let's say we'll choose a currency pair and we will on the basis of the fundamental news, we will decide whether it is going to go up, whether it's going to go down, and what as a trader you are supposed to do. Are you supposed to buy it or are you supposed to sell it? Now each currency has their own, belongs to particular country. So USD is for, dollar is for US, United States, euros is for Europe, GBP is for London. Okay. JPY is for Japan. So every specific currency is or belong to a specific country. Now, so now when Forex fundamental analysis focuses on what? It focuses on the economy of the country. Now, economy can be productivity, it can be employment, it can be manufacturing, international trade, what is the rate of interest. Like today, if any of a trader who has joined me today, you must be aware that today we had an NFP report. What is the NFP report? NFP report is the number of people, the employment rate that is going to be shared. So on that basis of that, there would be a lot of volatility in the market. So here, for the example, let's take an example of Euro USD. Now, in this example, the euro, you see this first euro here, euro is the base currency. Now, what is the base currency? Base currency is the first currency. It is the first currency that you're going to. Okay. So, what is the base currency here? It is euro. Okay. Now, if you believe that US economy will continue to weaken, which is bad for US dollar, what would you do? Will you buy or will you sell Euro USD? Now, in this case, if you think that US economy is weak, okay, you would execute a buy order. What will you do? Because you are thinking US dollar is getting weak, so Euro is getting stronger. So you are going to buy Euro USD. By doing so, you have bought euros with an expectation that it will rise against US dollar. Similarly, if you believe that the US economy is strong, okay, and euro is going to go down, or the euro market is weakened down against dollar, what will you execute? You will execute a sell order for euro USD. By doing this, what have you done? You have sold euros against the expectation that dollar is going to go up and euro is going to go down. Taking a second example. Now, in this example, leaving Euro USD, what have we said? I'm going to take a second example of USD JPY. Now, in this USD JPY, in US dollar is again a base currency. Here, that there in the first example, the base currency was euro. In the second example, the base currency is USD. Okay. Now, if you think that Japanese government is going to weaken the yen in order to help it export industry, what would you do? Obviously, you will buy USD JPY order. By doing this, what are you doing? You have bought dollars with the expectation that it is going to go up against Japanese yen, because Japanese government is the value of Japanese currency is going down and dollar is going strong. So you're going to execute a buy order of USD JPY against of USD against yen. Now, if you believe that the Japanese investors have made a good money and they're pulling out the money back from the US financial market and they're converting the dollars back to the yen, what does that mean? That the Japanese yen value is increasing and dollar is getting weakened. In this case, what are you doing? You are going to sell USD JPY. By doing this, what are you doing? You are selling dollars with an expectation that it is going to fall down against Japanese yen. Now, this is the example that how you can buy and how you can sell. So you should have your analysis of understanding the market, in which direction it is going to go, whether it is going to go up or whether it is going to go down. Now, if you are a person to use technical analysis, you have to understand that what kind of indicators are you going to use, which will help you out to understand if the market is going to go up or it is going to go down. If you are a person who judge market on fundamental news, then these two example what I've shared with you, to make it very simple, on basis of the economy or the productivity or the interest rate or the employment rate, will help you to judge and analyze the market, whether you have to buy or whether you have to sell, whether the particular currency is going to get strong or whether it is going to weaken. Okay. Now, how do you trade? So we trade in size of lots. Now, what is lots? Lots, I've given a very simple example here. Now, if you go to a grocery store and if you want to buy an egg, what do? Just you go and you just get one egg? No, right? Sounds silly. The grocery person will laugh at you and say, who gets a one egg? So you always get eggs in box. You either get 6 eggs, you get 1 dozen, you get 15 or 30. So you get it in quantities, right? In a box. So dozen, half a dozen. Similarly, in Forex, when you want to trade, you trade in units. Okay. So when you say you trade in units, it means you have 1 unit, okay, which is considered as 1 lot. Now, 1 unit in Forex, the standard unit is 100,000. 100,000 units. So in 1 lot, how many units you get? You get 100,000 units. So again, comparing it with 1 tray, 1 dozen. In 1 egg tray, how many do you get? You say 1 dozen. How many eggs do you get? 12. Similarly, in 1 unit, in 1 lot, how many units of shares do you get? 100,000 units. Now, not necessary that you have to go for 1 lot. You can reduce that. Not necessary that you have to go and buy 12 eggs. You can reduce it to 9 eggs also. Okay, so one lot is equal to 100,000 units. If you go for 0.1 lot, it refers to 10,000 units, which is also called as mini lot. And even if you want to go more lower than that, you can also go for a micro mini lot, which is 0.01, which consists of 1,000 units. Let me repeat it for you once again. What is lot? Lot is the size or the amount of units that you're going to buy while trading. So there are three types of lots. The first is the standard lot, which includes 100,000 units. Then you have the mini lot, which has 10,000 units. And the third one is the micro mini lot, which has 1,000 units. I hope the concept of lots has been explained and you've understood it, because while trading, it is very important for you to make sure that when you're buying, I've come across people or clients who consider one lot as just one individual single unit. No, it's a lot, and in that lot, you have n number of units. All right. Moving on to the next slide. What is margin trading? Okay. Now, let's say you're a person who wants to enter into the market, but you don't want to risk a big amount and you just want to start with a very minimum amount. Okay. So you will ask yourself a question. Now, let's say you want to trade. You have friends and people in and around you who are saying that, gold has gone really very down and it's a good time to buy. And you're wondering that, okay, fine, I have $1,000. Can I buy it? Your friend says that the current price for the gold is $1,700. So you have $1,000. The price for the gold is $1,700. So you ask yourself that, can you still buy gold? Yes, this is the beauty of entering the CFD markets, or when you're trading on a MetaTrader 5 platform. The beauty is that even if you have minimum cash, you can still enter the market, because as a broker firm, we provide you leverage. Now, what is a leverage? Let me elaborate it to you. When you trade with leverage, you don't have to enter or put full money. Okay, you just have to put a little deposit, which is known as margin. Let me give you an example here. Let's say if you are in Dubai and you are looking out for a beautiful flat at Marina and you want to just buy it. So you like something, will you just go and pay upfrontly $1 million, a million dirhams and get the flat? No, you will give a token amount, you will book, and then you will pay. So what are you doing? The token amount is referred as a deposit. Okay, that same token amount here refers as deposit in Forex market, which is called as margin. Yes, it is called as margin. Now, again, leverage is the ratio of the transaction size. What is the transaction size? Is the position size. What is the position size? Position size is the lot size against the amount that you are putting in. So for example, as a broker, you get from the broker, you are getting 50:1 leverage. Okay, now 50:1 leverage means, if you divide how much you will get 2% of margin. 2% of margin means $2,000 of margin is required to open $100,000 position. So now, if you want to enter the market, and if you want to buy something which is $100,000, worth $100,000, you don't have to remove $100,000 from your pocket and trade. No. What you need is just 2% of it. That's your booking amount, that's your token amount, that's your deposit amount that you're going to trade to buy a position of worth $100,000. So for $2,000, you have a value of $100,000 that you can buy. So margin trading lets you open larger position sizes using only a fraction of capital that is normally required. So a small margin deposit, okay, understand this also, a small margin deposit can also lead to your losses as well as gain. So the coin has both the sides. Okay, it has both the side, which is head and the tail. So here also, in trading Forex, you have both the side. There is profits, there are losses as well. Moving on to the next slide. What is Pip in Forex? Okay. The unit of measurement to exchange the change in value between two currencies is called as a Pip. All right. I've given you an example here. Sorry. I've given you an example here of Euro USD. Now you see here on this Euro USD chart, you see that we have sold Euro and the selling price is 1.13528 and the buying price is 1.13534. Now what does this refers at? That is $1 after point, it is 13 cents, 52 pips, 10th of the pip, 8/10 of the pip. Similarly, here it is $1, 13 cents, 53 pips, 4/10 of the pip. So after point, which is considered here is called as the pips. So first is dollar, then is cents, and after cents, from the third decimal onwards, it is called as pip. Now, what is spread? Now, if you have a pen and a paper or a calculator, do one thing, minus this sell price with this buy price and see what do you get. So if I subtract 1.13534 minus 1.13528, you will get a number of 0.6 pips. Now, what is the 0.6 pips? 0.6 pips is the spread. Okay. So, Forex brokers will quote you two different prices for currency pairs. So, spread is what? Spread means buying and selling after the point, whatever the difference is there, after it is spread. Okay. Now, when you're buying and selling, there are two types of prices. You will not have same price. Now, if you go to the market, if you buy a car for, let's say, 100,000 dirhams, and if you want to sell it, will the person will take it at 100,000 dirhams? Will he give you? No, he will reduce it and he will give you. So there are two prices, bid price and ask price. Similarly, in Forex market, we have bid and ask price. Bid price is the price at which you can sell the base currency. Again, coming back to our first example, which was Euro USD, where the base currency was Euro. So the bid is the price that which you're going to sell. You're going to sell. What is the ask price? Ask means buying. You're going to buy the base currency. And the difference between these two prices is known as the spread. Now, order types. Okay. Now, order type falls into two buckets. There are two types of orders. All right. Two types of order means there is one is the market order and the other is the pending order. Now, though most of the people don't use it, they try to execute their trades on market price itself. However, this orders makes a very it's very important when you're trading and when you have to do a risk-free trading, or if you are a person who is on a job and who cannot see the market 24/7, then these pending orders comes very handy. So what is a market order? An order instantly executed against a price that your broker has provided you. So let's say if the gold current price is going 1700, and if you go on the MT45 platform and if you're using a market execution price, you go and click, your order is executed. It means your trade has been executed. Now, pending order, it means it will have a time. You can set a time for it at a specific price that you're looking out. Now, you don't want it to be, you are thinking 1700 is the current price for gold, but you're thinking, no. It is further going to go down and I am going to buy it at from 1690 only. So what are you doing? You are executing the order. You're giving it a command that, put a pending order at a later period when your price, whatever the price you are looking at. Now, in this pending order, you have four types. You have the buy limit, You have the buy stop, you have the sell limit, and you have the sell stop. Now in this image, the blue dots that you see is the current price. Okay, this is the current price. Now once the market reaches what, first we're going to study about what is limit price. Once the market reaches the limit price, the order is triggered and executed at the limit price. So let's say order placed below price. Now your current price is 1700. Okay, if your order, now you are thinking that market is going to go down from 1700, it is going to go to 1690. So any order that you're placing below the current price and then it goes up, it is considered as buy limit. It is considered as buy limit. Similarly, what is a sell limit? Order placed. Now the current price is 1700. Now you're thinking that the order, that the price is going to go up. So order placed above the price, above your current price, and then the price goes down, it is considered as a sell limit. All right. So you can use this pending order execution when you are expecting the market is going to go down from a particular price or it's going to go up from a existing price. Similarly, what is a stop order? Now, a stop order is an order from executing until the price reaches a stop price. Now, when you will use a stop order, when you want to buy something, like you are expecting that at this price it is going to go and from that it is going to stop. So at particular price you go, you want to buy, only after the price rises you are going to use the buy stop order, or you're going to use the stop price order after the sell price has hit. So what does the buy stop indicates here? The blue dots is your current price. Now order placed above the price, and if the price keeps going up, what are you doing? You're putting a buy stop order. Similarly, for the sell stop order, order placed, this again blue one is your current price. Order placed below and the price keeps going down, it means that you're putting a sell stop order. I hope this concept of buy limit, sell limit, and buy stop and sell stop is clear. Okay, moving on to the next slide. Now, the beautiful part about our global market, about Forex market, is that it is open for 24 hours a day. When you say 24 hours of day, it means it is active entire day. Yes. So there are 4 main sessions that is there. So that you have a New York session, you have a Tokyo session, you have the London session, and you have the European session. So 4 main sessions which is there. So one market starts, closes, the other market starts. When the other market closes, the next market starts. So the market is open for 24 hours. So you can make money trading when the market moves up, or you can even make money when the market goes down. So it is not necessary, depending what analysis you have towards the market, whether the market is going to go up or whether it's going to go down. So when I say up and down, consider whether market is in the long position, it is going upward, or whether it is in the short position, it is going downward. Okay. So you can consider that, and you can enter the market and you can trade and you can book profit. But you will have a very difficult time trying to make money when the market doesn't move at all. Now, when the market is very volatile, very standard, not moving. So what happens? You don't know which direction it is going to go. It's a big wave coming in, whether it is going to go up or it is going to go down. Most of the time, market is volatile. And it is good to trade in volatile market because it gives you an opportunity to enter the market when there are a lot of buyers and sellers in the market. Now, these are the timings of the market when, as per the Eastern Standard Time and Universal Time, what time the markets are open. So the Sydney session is there, Tokyo session is there, London session, and the New York session. Okay. Now, the very important thing in Forex, when you enter the trading market, when you enter the Forex market, the important thing that comes, that how do you analyze? It's a big market. How am I going to have it? How am I going to trade? Where I'm going to trade? When do I enter the market? When do I exit the market? So every day there is a range. A range means you have your own area, like a cricket stadium, like how you play cricket. You play it in a stadium. You cannot go out the stadium. You have to play in the stadium. Similarly, for trading also, we have our own zone, and that zone is considered as support and resistance. What is the support and resistance? Support and resistance is that area where you can judge the market in that particular zone, whether it is going to go up or it is going to go down. So you see the zigzag line moving up and then down and up and down. So the upper level, the point which is up, it is considered as resistance. The point which is there down, it is considered as support. Now, when you look at the diagram, you can see the zigzag pattern and it's making their way up again. This is called as resistance. When it pulls down back, it is called as support. Now, what does resistance means? Resistance means there are ample amount of sellers, a lot of sellers in the market. When the prices continues going back again, and when it comes down and it reaches a support here down, support indicates that there are a lot of buyers. So this line indicates the number of sellers, that is the resistance, and this line of support indicates the number of buyers in the market. Now, why it is important? Because it gives you an idea which direction the market going in, which direction the market is going in, on the basis of number of buyers and sellers. And in this way, the resistance always continues. You see, one support is breaking, the new support is created, then again the resistance, then again the support. So it's a zigzag way pattern where support and resistance are created. So it also indicates that the prices are moving up and down. The prices never goes in one direction. What goes up has to come down. It again goes up and it again comes down. Moving on to the next slide. So we have covered most of the basic basic about forex trading. Okay, that what is forex trading, what is there in forex trading, how you can, the four important things is you have to understand your leverage, your margin, that is important. Then you have to understand your zone of trading, that is your support and resistance. Again, important, on what basis you're going to analyze the market, on a technical basis, or you're going to analyze is on the basis of fundamental news, or on the basis of sentiments of the people. You know, there will always be people who will always, the people who are always focusing towards the buy market. You'll find people in the market who will say no, it is going to go down. So depending on the sentiments. So remember the three pills: the news, the technical news, the fundamental news, and the sentiment news. Okay. Now what we will do is, like, you have a chat box option here at the corner where you will see the option of chatting. Okay. So you can ask your question there and I will try to answer as many questions possible. Okay. So feel free to put down your questions in the chat box. Okay. And I will try to answer most of the questions. Hi, Shauki. So Shauki, hi. So you have a good question here. Shauki is asking me how to buy for a long term. So see, for buying for a long term, you will have to actually understand deep about the funds of the particular country that you're looking out for. So let's say if you're a person trading in a stock market, so you have to understand that particular stock like Tesla, what are they, when are they going to share their reports, or what is their net worth or income, or are they going to have any dividends on it, all these factors. And on that basis you can think that at this point of time it is low, and from here the reports are in favor, the analysis are in favor, you can hold it and you can sell it at a particular point. Similarly, like for gold, now you see the market was just last week itself, gold was at its lowest of 1,614, and the people had bought it and it went to 1724. So there was almost a difference of almost 100 points plus. So people who invested made a profit, even have bought a one lot, would have easily earned $10,000. So again, depending, like you have to understand the market entry point and exit point is very important. So to understand when to buy for a long term, particularly you have to understand the fundamental analysis, the bonds, the interest rate for that particular country, how is the production going on, uh, are they coming up with anything new which will favor, which will be in the favor of that particular country, and on that basis you can invest in long term. I hope that is answered for you, Shoki. Sorry. Great, Shoki. Waiting out for a next question there. So we have also shared our details here, where you can directly reach me out on my email ID, or my contact number is given there. Feel free if you have any questions. Our office is at Business Bay, and we keep having. I've been doing this session from last month, where we've got a very good positive reviews about the webinar which we are conducting. It really helps most of the newbies who enters the market, because the basic things, there's nobody who will make you understand the basic things. And when conducting these, we got a very positive reviews that it helped a lot of people to understand at least how to enter the trade. Furthermore, I'll be coming up with new topics as well. If you have not attended my previous webinars, you can attend it. Mostly coming Friday, I will have a new topic where I will go a little further deep and talk about more on the trading planning, how it can be done. Any more question, guys? So Roylan, good question, that how does leverage affect the size of my account? So leverage will always be on your favor. Like let's say if you're assuming that the market is going to go up, and you bought something with using the leverage completely. You have a $10,000 account. You entered the market with leverage and you bought a position, since the leverage is, let's say, 100 times or 200 times, and you've taken full advantage of the leverage. Now if the market is in profit, so you will earn ample of profit, because you have taken a risk of taking more of the units with a minimum amount of value, because probably the value for that must be around $100,000. You just have $10,000, but you took a chance because you have a leverage. You took a chance. Market was favorable in your favor. It moved in your direction, and it gave you, it indicated you and gave you profit. So you will book the profit. But the consequences is like, if you take the complete leverage and if you don't follow a risk management, and if the market doesn't favor you, whatever the equity is there in your account or whatever the amount that you have deposit, the money will be deducted from your amount. So it will not favor you in that case. So whenever you are entering the market, and if you are a beginner, I would advise you that don't take a complete advantage of leverage. Always have a ratio of 2:1, or use a little bit of leverage where you can sustain your account. Okay, because market, there are a lot of factors which depends. It is just not one factor which impacts the market, that you're looking at a trading or a technical chart and it will give you a desire. There might be some big news coming in. Let's consider the war of Russia and Ukraine. At that point of time, it was way unpredictable which direction the market will go. So at this point of time, any consequences happen. COVID had played a very important role during when there was COVID, market reacted. So all this uncertainties, news may not favor your decision. Technically also, it might go in the other way. So always maintain your risk factor and then only trade. I hope that is answered, Royal. All right. So Shabir has a question. How is the trading success rate and who is the technical analysis? So Shabir, when you just go on the Google, and you'll get thousands and billions of people who are technical analysts. Probably one of your friend will also give you a technical advice. So that the best person is yourself, is your own self, who can study the market slowly and gradually. If never ever understand that, when you are entering the market, it's just somebody's telling you to do something. You don't know, it might favor that person personality, or he might be using his own strategy which he must have not shared with you, but he must have just told you the market is going to go up. It doesn't mean that you jump anywhere in between and just enter the market. It's a risk. So it is your own self who will have to study and understand, take a very minimum lot size, a risk-free amount, a risk-free trade size, and then trade. And technical analysis, the once you enter the market, there are a lot of indicators, there are a lot of news. You can use investing.com, there is Forex Factory, there is a lot of websites you can refer to, where you can get all the news updates. I hope that is answered, Shabir. So Kasilingam is asking me a very good question: which indicators is best to judge entry? So Kashi, when you enter the market, there are ample of indicators. Now, not necessarily all the indicators will always give you the result. So you have to keep on checking out all the ingredients. Sometimes RSI would be in your favor. Sometimes moving averages might be in your favor. Sometimes Bollinger lines would be in your favor. So not always. You have to see. Sometimes trend pattern would be in your favor. So depending, you will have to try and test. Not always the same indicator will help you always, or will be 100% accurate. So you will have to keep on trying different kind of indicators till the time you are satisfied that, okay, this particular indicator is helping you out to indicate that this is the entry point. And as said, the best indicator, create your zone, understand the zone. The support and resistance is the zone. You have to understand in that particular area how the market is going to. MACD is also good. So you can try different kind of indicators, analysis, write down your patterns, write down your details, that what, and accordingly it will work. And slowly, gradually try to use those indicators individually on your account and see which is in the favor. I hope that is answered, Kashi. So Imran has a very good question. My question is how the market works in recession. So the first thing, Forex market is very good and it favors individually. If you want to trade, there are a lot of people who want to always get a second income and they want to try their hands on forex market. As said, there is always profit and loss, but a smart trader is a person who minimize their risk. See, you cannot eliminate loss from trading. Understand that I'm being very clear about it, that profit and loss is a part of trading. You cannot eliminate the loss, but what we can do is, like, you can minimize the loss. So if you are a person who is thinking that I'm just going to make profit, 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 I would say calm down, let your mind understand that loss is a part of trading also. So maybe first three trades would be a loss, but I'm sure if you manage a proper risk reward ratio, your fourth trade will cover up all the three. I hope that is answered, Imran. Shabir is, so I should study the technical analysis, then only I can trade successfully. It is important to understand market. You just cannot get into just because somebody is saying. You have to understand the basic. Anybody who wants to trade, you have to understand the basic. You want to know more about it, Shabir, we as said that, you can come to our office, we can sit, we can let you know. And obviously Google is the best friend for everybody these days, because you get all the knowledge when you just enter anything, and you get ample of knowledge from Google itself. I hope that is answered, Shabir. So we are at Business Bay. Imran, we are at Business Bay. Kashi is saying news will change market direction. See, one of the factor, yes, it can. So that is the reason when you're putting your trade, as a trader, you should always understand that you have to minimize your risk. So there are things like stop loss. There are things like take profit, because you never know. You have to understand we are human beings. We are connected with emotions. So when you're connected with emotions, you cannot think that, I made $10 and it is still going up, so let me wait, it will go $20. And no, you have to be content. Even if it is going down, you have to put your stop loss. You have to accept the loss. Okay, fine. If it is going down, it is okay. Nevertheless, it is fine. Booking loss is okay rather than losing your complete amount. Change, news, indications, market is dependent on a lot of factors, fundamentally as well as technically, as well as sentiments. There might be 80% of people will be thinking that today market is going to go up, and 20% by thinking that it will go down. But suddenly Biden will come up and will give a speech, or Putin will come up and give a speech, and whatever the sentiment is, it is not working in the direction, and the market goes completely in the opposite direction. So at that point of time, if you have put your SL or your take profit, you have minimized your risk. I hope that is answered, Kashi. Great. You're welcome. So I've tried to answer most of the questions here. Okay. Any more questions, guys, that you have? See, trading is easy if you follow the rules and if you're disciplined with it. Roland, there are a lot of indicators, my friend. You can study MACD. These are the basic ones, which is generally easy. You can note it down if you want. It's MACD. There is moving average. There is RSI. RSI is very easy because it generally helps you out with the strength of the numbers of buyers and the sellers in the market. So it helps you out with a certain percentage, like 70% it has already gone up, so there is a chance that the market might come down back. So you can Google it, what are the best how to find 10 reversal, market reversal. As said that, on the basis of RSI, Kashi, you can decide that. So to know more about this indicators or how you can judge the market, as I said, on the fundamental news, if you're a person with fundamental, economy plays a very important role there. Okay. On the factors of economy or the currency of the particular country, it plays a very major role there. So that will help you out if the value for the currencies is going to go down or up. If you had recently, if you are a person who's keeping a watch on GBP, Great Britain pound, you've seen how much the value has gone down. Why? Because the government has exhausted their funds during COVID. They have given a lot of pensions to the people around, so they have exhausted with their funds. So now the currency has gone down. So this is one of the fundamental factor that the currency has gone down. But it's again an opportunity for the people to buy it at the lowest point, because what has gone down will come back up again. So yes, over and over again, I would like you to remember that you have to give it a try. You just cannot sit and understand that on your thinking it is going to work. You have to do your research and analysis, enter the market, understand why is that happening. Okay, I hope that is answered, Kashi. All right, Mohammed. Okay, we are in Dubai. We are from plus 7 years in business bay itself, Mohammed. Fundamental news, Rolian, the best is refer to investing.com. As I said, Forex Factory is there. A lot of you just Google it and you'll get ample of websites. You will get the articles. BBC is there. You can read all those informations there. Try to understand if there is anything, and if you feel that you're stuck somewhere, my number has been mentioned again. All right, please feel free to connect with us where we can guide you, because at SmartFX we believe, and it's a protocol that we teach our clients, especially the new beginners, the newbie who wants to enter the market. I hope all your questions are answered. Great. So feel free to connect with us. All right, anytime, if you all are if possible for you all to come over, let's you all can come reach our office. Also, you all can email me or connect me on the same number which is mentioned here, or WhatsApp me. My team will connect with you, and I will let you know the details as well. So I hope all the questions are answered. So Kashi, whatever support you need from SmartFX, we will try our best to give you the bestest support we can. But for that, you have to take the service first. Great. So guys, it was pleasure connecting with you all, and I'm thanking you all again for joining this webinar. Looking forward for you all to again join my second webinar, where I'll be talking more in depth and details about how you can manage your trades. All right. And till then, have a lovely weekend. Enjoy your evenings. Take care and good night. Bye.